Afternoon, everyone, and welcome to Small Business Relief, Navigating Canada's COVID-19 Programs, presented jointly by the Bank of Montreal and Wilson Vukelich, LLP. My name is Samantha, and I'll be moderating today's presentation. This roundtable discussion is the first in a three-part series exploring the many relief options that are available to Canadian small business owners amid the novel coronavirus pandemic. Our speakers will address legal and financial questions submitted by you related to wage subsidy and loan programs, avoiding employee layoffs, and more. Just as a general note to today's attendees, all of your mics are muted. That said, if you have any questions for our presenters, feel free to post them in the Q&A forum, as we'll be addressing questions throughout the presentation. If you have any technical questions as we get started, you can use the chat feature to communicate with us, and we'll do our best to help you out. Today's presentation is being recorded so we can provide you with the material afterward. Without further ado, I'd like to introduce our presenters, Joseph Pisani, who is the National Director of Franchising Services with BMO. He will cover everything financial in today's discussion, drawing on his more than 20 years experience in business banking, as well as his position as a small business entrepreneur. Legal questions will be addressed by Dan Condon and John Moore, who are both partners of Wilson Vukelich, LLP. Mr. Condon specializes in employment and labor law, advising business owners on issues related to these topics on a day-to-day, while Mr. Moore acts for clients in a broad range of corporate and commercial matters, including startups, financing, and mergers and acquisitions. All right. So welcome to everybody today. Okay, so we have some employment-related questions ready to go. I can start with one for Dan, if that's all right.
Sure, go right ahead.
This relates to Canada Emergency Wage Subsidy Program. Could you explain what the recent amendments to this program consist of?
Yeah, what's happened is, as I'm sure everybody would know by now, as originally introduced and passed at Parliament, the wage subsidy program was ending on June 6th. So what's happened now, the federal government has extended it to August 29th. That's the one thing that's definitely happened, which is obviously of great benefit to employers. But as has been the case sort of throughout this process, you know, not just with the federal government, but with various provincial governments as well, an announcement is made, you know, saying we're going to do this, or in theory, we're going to do that, and then the details will follow afterwards. So there's a number of other possible tweaks that could be happening to the CEWS, either just for the period going forward from June 6th, or, you know, as everyone else is aware, there's been a tendency to have things take effect retroactively as well. So the one thing that the government has said will consider is whether or not to drop the 30% revenue reduction hurdle an employer has to get over to qualify. You may recall that's what it was for all three claim periods initially, and then based on the realization that, you know, people didn't really start falling off the cliff until mid-March, the revenue reduction for the first claim period was dropped to 15%, but it's been 30% since then. And to be honest, the feds had thought there'd be more applications being made, and I think they've realized the 30% may be too high. So they're looking into that with business groups. That may come down. They're also looking to amend some of the requirements or rules to address certain types of businesses or entities which didn't qualify initially. So changing sort of the qualifications around some partnership matters, or to address seasonal workers who wouldn't qualify otherwise based on the earnings periods. Also amalgamations, right? If two companies amalgamated since last spring, how would they be able to show a reduction in revenues, right? Because now two businesses are one. So they're looking to allow that to happen as well. Some more potential tweaks around owners as to when they earned revenue or made earnings, I should say. So there's still more details to follow. I mean, any details that follow, I assume, will only be more beneficial and potentially have the applications be open to more businesses. But the good news is the program's being extended to August 29th.
And as a follow-up to that, we've had some question of whether employees can be recalled retroactively to have that pay subsidized under this program.
Yes, they can. The federal government has been clear on that from the outset. They were even clear on the fact that, you know, someone's recalled, there doesn't even have to be a full plate of work for them to do. So yes, you can recall them retroactively. And I have clients that are doing that. Actually, I was drafting retroactive recall letters yesterday. And the reason for that is in part is to qualify. So right now we're in the claim period, May 10 to June 6. Well, if an employee has, you know, more than 14 days that they've been laid off in that claim period, you won't get a subsidy for that employee. So, you know, what a number of employers are doing, if they can, because they'll have to make the payment up front, they're recalling not only just for now, but also retroactively. Now that may cause some, some reconciling on the employee's part with respect to SERB, but they're still going to be further ahead, obviously.
Right. And does this apply to independent contractors as well?
No, not if they're not paid as employees. And so it was an employer alert, you know, we send out all the time from our firm that myself and one of my other partners did a couple of weeks ago, outlining that. And no, as currently constituted, they wouldn't. So questions become, do you make them employees now? You know, there's all kinds of issues around that. But if anyone's considering that, because there's repercussions on, you know, relating to more than the subsidy, they should be following up with their employment lawyer.
Right. And I mean, we might as well stick with the Canada Emergency Wage Subsidy Program because we do have a few other questions related to it. Can this program be claimed for the owner of a business or the owner's family?
Well, if the family's treated as employees, then yes, they're included. For the owners, it depends on whether or not they've had employment income recorded in the relevant periods. And that's why, and because of that, it was if they hadn't had any up to March 15th, I think in 2020, time is kind of blurring, they wouldn't otherwise, you know, they're eligible, but they wouldn't have qualified as specifically. And that's one of the tweaks that the federal government's looking at now, is to come up with alternate time periods for to allow owners and other employees who've been on leaves of absence, for instance, to qualify.
And that sort of relates into the SERB. Can a recalled employee retain eligibility to receive the SERB?
Yeah, as long as they don't earn more than $1,000 in the month, they'll be able to keep their SERB benefit. Anything more than that, there'll be a repayment restarting. So I know, you know, employers as well, clients as well, who have been, you know, recalling people on, you know, for 1 day a week or, you know, 2 days a week, what have you. And you just have to be mindful though of that $1,000 threshold. Now, the other thing to bear in mind is, even though the SERB runs through October, employees can only, as of now, receive payments under it for 16 weeks. So, you know, for those businesses that had to lay off or shut down sort of in the immediate aftermath of the orders, you know, what are we at, another 3-4 weeks, those employees are going to run out of their SERB entitlement, and then they would just default to regular EI. But but which has different rules around what you can do and how you can bring employees back and pay them. But for the SERB, right now it's still $1,000 a month.
All right. And I'll switch over to financial for a bit to Joseph. Are you able to speak to what should small business owners know about the Canada Emergency Business Account, SEBA, as it relates to the Business Credit Availability Program? What are the differences there?
Well, let's go with the CHIBA. The CHIBA was launched right from the get-go to all small businesses that had financing, that had revenue of, at the time, it was $50,000 to $1 million. They then subsequently changed it over to $20,000 to $1.5 million. And that was for, they would collect $40,000 on that. The bonus of this whole program was the fact that they would be administered through their bank. So they would have to apply through all their banks. The financial institutions work with the federal government on this. The federal government used their CRA site along with all the banks to process the applications. The applications, you would go online, you would process them. It was actually a quick process, processing. Then the CRA would then verify the accounts and to ensure that what was given on the site, they would verify to ensure that it was truthful. Take about 5 business days to 7 business days before the accounts would be debited or credited the amount that they would get. So that was a $40,000. That $40,000 constituted the amount of if you were to pay that loan off within a certain amount of period, you would get a $10,000 basically grant, and you just have to pay back the 30. The difference between that, and you were saying, and the other program you were talking about was?
Credit Availability Program?
Credit Availability Program is basically through their own financial institution. I mean, credit availability, they would talk to their bank about what available credit is availed to them. There is a BCAP program that came into place whereby the Export Development of Canada as well as the Business Development Canada put together a program with all the banks, and that program basically was eligible to help with liquidity and operating problems of the company. So they would look at expenses such as rent, payroll, to help them over the hump of this COVID period. Bear in mind, this would be available to only those companies that were viable prior to the COVID disruption. So if the company had some issues prior to this, then they would not qualify for the program. With the EDC, you have a up to 5-year amortization and term process to pay it back, and the BDC was 10 years. The EDC is a guarantee program with your financial institution, whereas the BDC is a co-lending of up to 80%. So they would co-lend of up to 80%. The EDC did have a premium to be paid on top of the standard rates. You'd have to pay a fee. And one of the biggest, like I said, one of the biggest covers for the BCAP program is that it's there for your working capital needs going forward during the COVID disruption.
Okay, thank you. And looking at other programs, some of the more corporate level, John, you might be able to speak to this one. How does the Canada Emergency Commercial Rent Assistance work?
Yeah, the government really loves these acronyms, don't they? And I don't think there's any way to really pronounce CECRA that's a happy way to say it. So this is a program that helps commercial tenants and their landlords. The basics of it are that any rental that a company is paying under this program, if you meet all the tests and you do all the things that are required, essentially the tenant is going to pay 25% of it, the landlord is going to forgive 25% of it, and the government is going to fund 50% of it by way of forgivable loan. Now that sounds great, except there are certain, barriers or requirements to enter into this program. The main one of which is that you have to have the landlord on side, because the landlord is essentially forgiving 25% of the rent. Now, some landlords, and we've seen every reaction from landlords. Some have said, the lease gives you no relief, I want 100%. Some landlords have been more willing to deal with their tenants, and the gamut of that is huge. But for this program to be eligible for the 50% kick-in from the government, the landlord has to agree in writing to a rent reduction program for the months of April, May, and June. Right now, that is what's available. And the landlord has to agree to reduce the rent by 25%. Well, essentially reduce the rent payable by the tenant to 25%, take the 50% from the government, and forego the remaining 25%. So that's the first one. Now, the second part of this is also there's requirements on the tenants. So it's only applicable if the tenant pays no more than $50,000 a month in gross rents. And it's only available if the tenant generates no more than $20 million in gross annual revenues. And perhaps the biggest one is that the tenant has to either have temporarily ceased operations or suffered a 70% decline of revenues compared to the pre-COVID-19 period. So those are pretty limited applicability for the program. But really, this particular program is addressing people who have just been completely decimated by COVID-19.
So those would be the only eligibility requirements for tenants and such of this?
Well, no, there's more. I mean, for the landlord, I mean, there's more. Obviously, it's a government program. There's more technicalities. For instance, the landlord has to be financed. It has to be a revenue-generating commercial property. Obviously, the landlord must have tenants that meet this test. It has to have a mortgage loan that is secured on the commercial real property. And I guess the landlord also has to agree that it's not going to evict the tenants during this period. And the landlord also has to agree that it's not going to come after the tenants for the back rent that it forgoes, that 25% that it's forgoing. It can't collect it. Now, the program is applicable retroactively, but again, the months as it is now that are applicable are April, May, and June.
John, if I may ask you a question on that, how many applicants have you had for this program so far?
Generally, we just kind of point them in the right direction. So the program hasn't really been live until the middle of May, and that's kind of where we are now. So we're not administering it for clients. It's more along the lines of handling calls and giving them kind of the background as we know it and directing them in the right direction.
Are you seeing good receptivity on the landlords for picking this up?
It's a mixed bag. It really is a mixed bag. As you can guess, I mean, there's some landlords that from day one, when we would get calls from tenants, and I think landlords have generally softened their stance, okay? I think the first rent payment on April 1st, I think it was almost unanimous with every landlord that any of my clients were dealing with that you had to pay in full. And as April went on, and I think a dose of reality hit the landlords that, there's no new tenants out there looking for places. You've got to deal with what you got and make the best of a bad situation. I think, over the last 6 weeks, we've seen a softening generally of the positions of landlords.
And regarding this program, do landlords have to participate in any application for the funding?
Yeah, they would have to. There's I mean, as it seems now, there has to be some sort of written agreement with the tenant with respect to the rent reduction program that would go along. And yeah, the landlord also has to obviously demonstrate its eligibility, you know, with respect to its commercial property, the mortgage part of it, the fact that the tenants are what they call impacted small business tenants, and that the tenants that they have meet those tests.
And bringing it back to the financial angle, Joseph, what have you been hearing on the state of small businesses during the shutdown, especially regarding gradual reopenings?
Well, there's been some good news as of late. A lot of the small businesses, mainly the QSR, the quick service restaurants, what happened in the beginning of the first 2 weeks of March that the COVID disruption started, so the last 2 weeks of March, they were completely shut down to a point where their sales were running at only about 10 to 25%. Since then, every week has built up. They have had to shift and pivot to the to service their customers properly. What they've done is been able to deliver, use their drive-throughs. They become innovative. They become using social media. Their sales now have climbed up to roughly about anywhere from 75 to 85% pre-COVID. They're feeling good about it. One of the other things that they have realized is that they've had to cut, although they've had to cut staff, in which Dan had talked about earlier. Their staff have been furloughed or they've been laid off. They were able to maintain their sales at a lower staff level. Thus, their expenses have reduced. Many of them have talked to their landlords. They've rearranged certain lease agreements in order for this short period of time. They've been able to pay what they can. They're feeling good to being able to come out. Now, there are also those other businesses that have been completely shut down. Those include the personal care, hairstylists and so forth, and nails, and as well as gyms, small gyms, boutique gyms. They're all closed down. Although the gyms have been able to pivot to an online servicing, as well as being able to use YouTube and Vimeo and so forth, the personal care departments have not been able to do anything much of that, but start taking bookings, because the next big thing that will rush out is the personal care, and that also included, of course, pet care as well, the dog groomers and so on. It's the interesting fact of what's coming out with this whole COVID is that necessity breeds the mother of invention, and innovative stances have come out of these small businesses. So going forward, you're going to see what was old and what's going to be new.
And we've just received a question through our Q&A forum, which I do invite all attendees to pipe into if they have any questions. This appears to be more for Joseph. Should franchise owners look into personal loans to cover rent if their landlord doesn't want to offer the 25% relief?
Well, listen, as a franchise owner, as a franchisee, you would have to basically look at what you're going to, by all means that you're going to need to do to keep this business running. If it was a viable business prior to COVID, and you believe it's going to be a viable business after COVID, taking a personal loan in order to pay the monthly rent as you go forward will help you in the long run by keeping your business afloat. You would have to talk with your accountant, as that would be a shareholder loan injected into the business, and there are tax advantages to having a shareholder loan, and how you would process the interest on that. But personal funds, like any other business, this is your personal business. You need to inject your own personal funds inside to keep it viable. how you do that and how you get your funds is just different. There's different means, from a bank loan to friends and family. But I mean, if it was viable beforehand, it will be viable afterwards too.
Right.
If I could just add something to Joseph's answer, and I totally agree 100% with what he said. And one thing to remember as well is that in a franchise arrangement, and pretty much almost always or very commonly in a lease arrangement, the shareholder is going to be personally liable anyway. So the fact is, it's almost a pay now or pay later type situation that you're in, unfortunately.
Have you seen many cases come through legally to do with franchisees, franchisors during this time, John?
I haven't had anybody come to me because of franchise particular issues, but I get the sense that franchisors are being more amenable to dealing with their payments and that sort of thing in a reconstructed way, unlike landlords who don't really have the same relationship with their tenants as franchisors do with franchisees. The reality is, any franchise that's suffering, the franchisor is going to have the same issue with all of its franchises. So it wants to keep the business viable. And, you know, it's got to look at the opportunity cost of replacing a franchisee as well. So no, I haven't had as many people coming to me as I have had in tenancies. But I think that's because franchisors are working with them more creatively to come up with solutions.
Yeah, and I can verify that when speaking with many of the franchisors that are across the country. They are all doing whatever they can for their franchisees. They want these franchisees to succeed and come out of COVID, and it is their annuity. They want them to come out and continue then paying their royalty fees that they paid to the franchisor. So they will be as accommodating as possible and coming up with ideas and utilizing every means that they have in order to sustain these franchisees during this period.
We do have some more Q&A questions that are, some of them are a bit niche, but I'm hoping that we can address them. This one is from an architect that says, can you address a single man firm and opportunities for COVID relief? I'd imagine legally and financially. Not sure who wants to take that one on.
I mean, if it's a sole proprietorship, they could still, the sole proprietorships do technically qualify for the wage subsidy. Whether, you know, the individual person will be able to, will depend on how they're being paid, right? They have to have, as of now, they have to have T4 income within that the Jan 1 to March 31 period, or the other periods to review. But the fact it's a sole proprietorship or incorporated, but with just the one owner, shareholder, worker, doesn't in and of itself exclude them from the wage subsidy or even the SERB necessarily. It just depends on how they've structured their arrangements on an ongoing basis.
And we have another, I think from the jewelry sector. What opportunities are available for vertically integrated business? Specifically, this operator mines precious opal from Canada's only opal mine and is in need of financial assistance in order to continue for business development. Any recommendations there?
I think they need to start off with their current banker at the moment. They would know what their financial position is. They would talk to them about what their plans are and where their position is financially as well, and what their and of course what their future would hold up. They would be looking at the BCAP program if they would need further funding, or I mean, they can also, their bank may still be able to finance them on a regular basis if everything is working towards in their favor. When they approach their bank, they should have a cash flow statement along with their some sort of a business plan that outlines what they are looking to do and why they're looking to do that and what their end result is going to be. But a cash flow statement indicating 12 months to maybe even 2 years of cash flow, showcasing why they would need that little injection or that big injection, would help them a lot in explaining to their financial institution.
We have another one regarding specific finances. If a company doesn't have, presumably this year, doesn't have more than $20,000 of T4 slips for 2019, but can show more than that in previous years, can the SEBA program be applied?
The SEBA program has changed in the last day or so, and it's new information is coming forth. Some of the highlights that they are indicating here is that you would have to have a business number and have filed in 2018, 2019. So this may apply to the individual here. They would have to have eligible non-deferrable expenses of roughly about 40,000 to about 1.5 million. Eligible non-deferrable expenses could include costs such as rent, property taxes, utilities, insurance. So they may have the T4s, their T4, their summary T4 will have to, will showcase that. But as the program comes out with more and more details, as the government comes out with this, they may qualify. They would just have to, I guess, wait and see what the CR under the Canada.ca site indicates for the federal government.
Great, thanks so much. We're out of submitted questions, so I'd like to turn it over to our panelists for closing remarks. John, let's start with you. Do you have anything else specific you'd like to mention to our audience today?
Just that, you know, the programs that we've spoken of obviously are not the full gamut of what's out there. On May 13th, the government announced that it was funding the 6 Canadian regional development agencies for $1 billion. Now that's between all of them. Those programs that are put on by those agencies are intended to kind of hit the gaps between the other national programs. But there is some authority for each agency to kind of figure out the terms of what it's going to be doing and how it's going to be doing it. It looks now, at least for the Ontario or Southern Ontario agency, that a lot of this is by way of loans or in some cases forgivable loans or loans with payment terms that don't start for a couple of years. So, you know, if you don't fit in these programs that we've talked about or the ones that you've seen, there is more stuff that will be available. And as everything, I mean, there's some issues on integrating everything, and I think the regional development agencies are there to kind of catch those who fall through a lot of the other gaps. So that's just something to watch out for when you're seeing what's available to you as a business.
Great, thank you. And Dan, anything to add?
Sure. No, the one thing that I've been dealing with on a regular basis with clients now, as the time is passing and the layoffs are continuing, is that they have to bear in mind that, you know, the fact there's a wage subsidy or the emergency benefit doesn't change when, under the various provincial legislations, a temporary layoff becomes a termination. And if that happens, then the employer has the same obligations to the now terminated employee that they would have had if, you know, 5 months ago, they just terminated that individual on a without cause basis. And so, you know, for the types of, you know, some of my clients who basically had to shut doors, you know, March 16th, you know, in Ontario currently still, if you don't provide benefits, a temporary layoff after 13 weeks is a termination, which is coming up hard in about 3-4 weeks. You've got to keep that in the back of your mind. You have to have that bookmarked. And now with the extension of the wage subsidy, with different things like that, clients and I are working together to decide what's the best way to try to arrange things, through retroactive recalls, through rolling layoffs, through any of these measures, to try to make sure that over and above everything else that you've had to deal with the last 10 weeks, you're now not walking into, a number of employee terminations. Some provinces, so far BC, Alberta, and Manitoba, have extended the periods of time before a temporary layoff would become a termination. But, Ontario, the other provinces have not as yet. So you really need to be on top of that and be working with your, whoever you get your employment law support from, to make sure that you're doing everything you can to avoid those terminations.
Thank you. And Joseph, any closing remarks you'd like to mention to our audience?
First and foremost, I would suggest you speak with your banker. Talk with your banker in the sense of where you're standing as of today. Showcase to them what you were prior to the disruption, and then showcase to them what you feel your cash flow will be in the next 12 to 24 months. Giving them an idea of how your business is being run today will give them comfort in what they need to make any kind of decision for you going forward. So it's a matter of understanding what your cash flows are. I would suggest you speak with your bookkeeper or accountant to help you if you're not understanding clearly how your cash flow should run, and then speak with your banker to ensure that they understand where you're sitting as well.
Okay, great. We actually just got one more last-minute financial question in the Q&A chat. It's from an architect who is based in BC that's lost over 35% of his work since 2019, but has no staff and works out of a home studio. He's found no assistance that relates specifically to him. It's, either $2,000 or $40,000 business loans. Is there anything to speak onto that?
I think the revised SEBA program that the federal government has announced recently may address this, but at the same time, he's not looking for a $2,000 or $40,000 business loan. It comes into a predicament that he is although he's incorporated, he's a self-employed incorporated. The SEBA might be the only thing that's going to be availed to him. Besides the SEBA, then he would have to be looking at trying to get personal lines of credit or personal loans. It's not a typical situation. He has no employees, and he works out of a home studio. So it's not your typical business that the federal government or the banks have been looking at. This is a SOHO, and at this stage, the SEBA would probably be your only and probably your best bet on obtaining that $40,000.
And one last question, which I think will fall to Dan. It's an employment-related question. Does a temporary layout constitute constructive dismissal?
Depending on the facts, it may, yes. It depends what agreements are in place between the employer and employee. It depends on the past practice of the employer. But as was the case in the 2008 crash, I've been involved with clients who have, to date constructively dismissed technically, thousands of employees. And, for the most part, the employees realize that it's being done for legitimate reasons, and it's being, they're being accepted. There's various ways, again, if you want to try to avoid that risk, that you can rely first on vacation or other things before you place employees on layoff. But yes, from a technical legal perspective, a temporary layoff, even though permitted under all of the various provincial employment legislations, is deemed to be a constructive dismissal at common law unless it's an express or implied term of the relationship that there could be temporary layoffs. So the answer is yes, no, maybe, depending on the facts. And if you, it's something you need to review with your employment lawyer.
Great. I'm glad we were able to get to those last questions before wrapping up for today. So thank you so much to Joseph, Dan, and John for joining us today and shedding some light on the many questions surrounding these national programs. Just as a note for our attendees, a recording of the complete roundtable will be available 1 week from now. We'll also send you a link to the recording via email that'll go to all registrants. Today's panelists' contact information is on the screen right now if you have further questions and would like to get in touch. Thanks to everyone who attended today. And before you go, please take a couple minutes to give us your feedback by completing our survey. It should appear in your browser after you close Zoom. So thanks to everybody. Have a great afternoon and stay safe.
Take care, everyone. Bye-bye.